Hello everyone, my name is Brad Myers. I am Assistant Director of Financial Aid here at LSU. Wanted to take some time to go through a number of key topics with you today to help better prepare you for the fall 2021 semester and to ensure that you have the information needed to better manage your financial aid eligibility going forward. So let's get started. All right, so here we have today's overview, which we will go through a number of very important topics that will get you up to speed on what you need to know with financial aid and scholarships and for your time here at LSU. So on the overview, you can see it starts off with a discussion on scholarships, both merit and private. We then transition to talking about the Louisiana State TOPS program. We then talk about cost of attendance and direct cost and what the difference is between those two. We'll then transition to the FAFSA application, talk about different types of federal financial aid programs, and then lastly, we'll finish up with a discussion on the fee bill. So when considering scholarships at LSU and at higher educations in general, there are two primary types of scholarships that you need to be aware of. The first is considered merit scholarships, and merit scholarships are effectively institutional scholarships generally based on academics, athletics, individual excellence, or other specified criteria. And merit scholarships encapsulate what traditionally are known as academic scholarships, freshman scholarships, if you will. So these are specific criteria that individuals have to meet in order to earn one of these scholarships. And so for all entering freshman students, scholarship consideration is based off of that common application and your admission application. So your application is reviewed holistically by the admissions office here at LSU for scholarship consideration. And so scholarship consideration is done off of a variety of factors, not just specifically academic components. So you have your GPA and your ACT and SAT scores, but also other factors that are considered as well, which include things like individual excellence and community service and a number of other variables. So what I would say to that effect is that if you have any questions about your merit scholarship qualifications, definitely speak with the admissions office, scheduling a meeting with your admissions counselor to discuss any further questions about the merit scholarships here at LSU. In addition to merit scholarships, you have private scholarships. And these scholarships are external to the institution. And these are done traditionally through regional or national or local organizations. So to give you an idea, this could include national companies like Coca-Cola. You may have local or regional organizations like the Baton Rouge Area Foundation, Rotary Clubs, or even memorial scholarships for individuals who have passed away. Next, we'll talk about additional scholarship resources. So aside from scholarships within the institution and in a merit capacity, you have senior college scholarships. And these scholarships are awarded to students at the university through their senior college. And so these senior colleges are where you go once you have earned a certain number of hours. These are effectively your departments or your majors. So College of Science students qualify for College of Science scholarships. And then you have students in the mass communication majors. Those qualify for scholarships through the Mass Communications College. So each of your senior colleges has their own endowment of departmental or senior college scholarships that you can qualify for. What you need to do is make sure that you speak to your academic advisor in your senior college to identify what specific criteria, what specific things you need to be doing to ensure that you're giving yourself maximum consideration for these different types of scholarships. In addition to senior college scholarships, you have a website listed on this slide called Career One Stop. And Career One Stop is a federal database that is managed by the U.S. Department of Labor that indexes over 5,000 undergraduate scholarships nationally. And that's a huge amount of scholarships. A lot of these are going to be very specific. So it'll say you have to have graduated from this high school and then go to this college and this specific major and know this person in order to qualify for this scholarship. However, there are also a large number of other scholarships that are not overly specific, that may be a little bit less rigid in their qualifications that you can find on that database. One of the great things I love about this database is the fact that all of the scholarships listed on this website are sorted by due date. So all of the scholarships that you pull up now will show that these scholarships are due in February. And then the next set of scholarships will be due in March. And then the next set of scholarships on the list will be due in April, and so on and so forth, all throughout the year, 12 months around the year. So make sure that you're continually watching this website, you're going through, digging through this database to see what external scholarships you might qualify for, and then make sure you submit your application. The biggest reason I say to utilize this resource more than any other is simply because Career One Stop, as notated on the slide, is managed by the U.S. Department of Labor. So you don't have to question the validity of the scholarship organization or the scholarship funding. The U.S. Department of Labor validates these different scholarship organizations before they're put into this database. So you don't have to worry about your identity getting stolen or getting scammed, if you will. Next, we'll talk about the TOPS program for our Louisiana students. For students who graduate from a Louisiana high school and meet certain other criteria, the Taylor Opportunity Program for students, or the TOPS program, awards a fixed dollar amount of funding for students to use at a Louisiana high school, or a Louisiana college or post-secondary institution. It is governed by the Louisiana Office of Student Financial Assistance, or LOSFA. In order to qualify for TOPS, every student must at least complete a FAFSA application by July 1st of each year, or if you're not comfortable completing a FAFSA application, there's an alternative application that you can complete on LOSFA's website. The base value of TOPS, as shown on this slide, is fixed and will not change from year to year depending upon appropriations from the Louisiana legislature. And the reason we include this bullet point is because in previous years, the TOPS program was matched up to whatever was that tuition was charged. So if tuition was $1,000, TOPS was $1,000. Well, in the mid-2010s, the Louisiana State Legislature decoupled TOPS from tuition, and now the amounts shown on the screen are static. They will not change going forward unless anything happens within the Louisiana State Legislature each year with regard to appropriation. So if they appropriate more money for the TOPS program, then the funding could go up. If they don't appropriate enough money, the funding could go down. At this point in time, we do not expect there to be any changes to the TOPS program whatsoever in terms of appropriations going forward. So the amount you see on the screen is the amount that we would expect you to receive each year for the next 4 years. And you can see the criteria listed on this chart as well. So you have 3 primary level of TOPS awards. You have the Opportunity Award, which is for students who have an ACT score of at least 20, with a cumulative core GPA of at least a 2.5. And these students are eligible at LSU for $7,462.98 per year. In addition to that, you have the TOPS Performance Award, which has a ACT score qualification of 23 with a 3.0 GPA on that core coursework. These students receive an extra $200 per semester on top of the base TOPS Opportunity Award value. So an extra $400 per year by simply having a little bit of an elevated academic profile. And then the Honors Award, which is the top tier of the TOPS Award, adds an extra $400 per semester or $800 a year on top of your base TOPS Award. And to qualify, you have to have at least a 27 on the ACT with a 3.0 GPA cumulative on that core coursework. So if you do have any additional questions about the TOPS Award, you can see the website listed here on the slide, osfa.la.gov. You can visit the website, go into the student portal, and they have all kinds of information available for you, as well as contact information if you do need to speak with LOSFA. Now, in addition to qualifying for TOPS initially, one of the most important things you need to know is how to keep TOPS. And if you consider the TOPS value, you're talking about approximately almost $30,000 over the span of 4 years. That is free money for school. And that is a lot of money that can be taken away if you don't meet certain minimum criteria. So if you look at the slide, we have all of the TOPS criteria listed out for you And you really should make sure that you write these down and you check on these every single semester to make sure that you're making progress towards meeting these criteria. The main reason is going to be the first two bullet points can lead to some very disastrous consequences if they're not met. So I'll go through the criteria. I'll kind of describe each one in its own specific context and emphasize what you need to know. The first bullet point states that students must be enrolled in full-time hours as of the 15th day of class each semester to receive payment for TOPS for that semester. So in order to even qualify for TOPS for a single semester, you have to be enrolled in full-time hours on the 15th class day. However, in the event that you do not enroll in full-time coursework as of the 15th class day for that semester, your TOPS award could be potentially canceled permanently. That means that in your very first semester at LSU, if you forget to register for 12 hours and instead you only register in 9, then you potentially could forfeit TOPS for an entire 4 years and never receive a dollar's payment because you did not meet this continuous full-time enrollment requirement. So it's very, very critical to make sure that you understand every single semester you must be at least full-time. Secondly, students must earn a minimum of 24 credit hours each year, which does include intersessions and summer semesters as well. The year starts with the fall semester and goes all the way through to the next summer semester. And so you have that calendar year, basically August to the end of July, to earn 24 credit hours. This affects a lot of students, especially after the fall semester. And what I mean by that is you may have a lot of students who are in the fall semester who drop a class and earn only maybe 9 hours. So that means that you will then have to make up a lot more hours in the spring, approximately 15 hours, in order to meet the hour requirement by the end of the spring. But that's a lot of hours to take. So to kind of break it down a little bit further, you could effectively earn 9 hours in the fall, take and earn 12 hours in the spring, and then take another 3 hours in the summer. As long as you earn 24 credit hours each year by the end of that summer semester, then you'll be good to go with regard to the yearly hour requirement for TOPS. Lastly is the GPA requirement. The GPA for TOPS has multiple points at which GPA is checked. At the end of any major semester, and this is summer, fall, spring, you must have at least a cumulative 2.0 GPA. So this is a base eligibility requirement that a lot of students don't realize. And the students that are most detrimentally impacted by this policy are first semester freshman students. And the reason they're detrimentally impacted is because they don't necessarily have a buffer semester to balance out a bad first semester. Your first semester GPA is your cumulative GPA in a lot of instances. And if you do not meet this 2.0 cumulative GPA at the end of your first semester of college, your TOPS eligibility is then suspended for the spring semester. This means that you will not receive TOPS for the spring semester, basically your second semester of college. So it's very, very important to make sure you always, at the very least, have a cumulative 2.0 GPA following each major semester. And then once you have earned that, then TOPS checks for a yearly GPA. And the yearly GPA is checked at the end of each spring semester and is based on the number of credit hours that you have earned by the end of that spring semester. So if you have earned less than 48 credit hours by the end of the spring semester, then the state and TOPS will be checking to see if you earned at least a cumulative 2.3 GPA. If you earned greater than 48 credit hours or 48 and above, then that GPA requirement now goes up to a 2.5. If you're a performance or honors recipient, you're receiving one of those stipends, you have to always have at least a 3.0 GPA. So a better way of thinking about this is that at any point in time in your early academic career, you should always be aiming for at least a 2.5 cumulative GPA, at the very least. The reason being is because while you can slip up a little bit and maybe have that 2.3 by the end of your first year, you're still then going to have to raise that 2.3 all the way up to a 2.5 by the end of 48 credit hours earned. So why put yourself in a situation where you're kind of digging out of a hole? Instead, aim for a 2.5. Why not, at a 3.5? Let's just aim for the 3.5 and you don't have to worry about it. You'll be good to go. In the event a performance or honors recipient does not earn that cumulative 3.0 GPA, their TOPS award will be downgraded to the opportunity award value. That stipend value will then be gone. It'll be revoked permanently, and it's not something that can be regained. So make sure that if you are receiving that stipend and you are on the performance or honors level of TOPS, that you always aim for that 3.5 GPA and never run the risk of falling below that 3.0 cumulative. But as with everything, we understand that there may be situations where you need to drop a class. If you do need to drop a class, you are prompted on your MyLSU account, as well as by our office, to contact our office. So when you go to drop a class, it will tell you with a pop-up box on the MyLSU account to speak to our office first, and you absolutely should do that. We want to make sure that before you drop a class, you're not putting yourself in a situation where you potentially could lose eligibility for any sources of funding. Some sources of funding, depending upon when you drop the class, you may actually have to pay back, and we don't want to put you in that situation. So make sure that you check with our office well in advance of ever hitting the button to actually drop a class. So next we'll talk about what is cost of attendance. And there's two primary differentiation of numbers here. There's two key concepts that you need to know. One is called cost of attendance and one is called direct cost. Cost of attendance, as shown on the slide here, is the amount it should cost an average student to attend for a given semester and or year. The cost of attendance is calculated by each institution individually and provides averaged out costs for different categories of expenses that students will traditionally incur in a given year, including tuition and fees, which is your average tuition and fees based on enrollment status. So your average tuition and fees for students in 3/4 time and your average tuition and fees for students in full time. In addition to that, you have your average housing costs for students based off of where you're living. So if you're living on campus, then you have an average housing expense that is applied to this cost of attendance. If you're living off campus, that comes with an associated value. And then if you're living at home with a parent, obviously your housing expenses will be less, so your cost of attendance may be less. In addition to that, you have an average expense for meals, which covers all costs for meals during your enrollment. So it gives you an allowance, so to speak, for the average amount of meal expenses that you can expect to pay during your period of enrollment. And then you have three other categories. Won't go into too much detail, but primarily you have transportation, which includes your transportation to and from school. For example, if you're living off campus, you may have a greater transportation budget than students living on campus because of the difference with that of having to travel from an apartment as opposed to living on campus. You also have a book and supply allowance. So we average out the cost of books and supplies for students during your period of enrollment based off of how many hours you're taking, and you're given an allowance there. And then your personal miscellaneous expenses that you will incur during your academic career, such as your other necessities like clothing and toiletries and entertainment and other living expenses. And so the cost of attendance, the one important thing to note about cost of attendance is that it is not an exact amount that you're expected to pay. Like I said, it's an averaged value, including all of these different categories. So with it being averaged, if you live in a cheaper housing situation than what was provided for in the cost of attendance, then you're not necessarily expected to pay anything more. That's just the difference between what was allocated for you in a cost of attendance as opposed to what your actual expenses incurred, which we'll get to that concept in a second, called direct cost. So I wanted to give you an example so that way you can kind of see what it is that I'm referring to. So on the screen here, we have Mike the Tiger, who is taking 12 hours of coursework at LSU. Mike will be living off campus and will be covering his own meals. So Mike's cost of attendance is comprised of the following. You have his full-time tuition and fees at $11,962, a transportation allowance of $38.40, a personal allowance of $38.46, a book and supply allowance of $1,038, housing allowance $96.32, meals $5,044. So a total cost of attendance of $35,362. But again, this is not necessarily what Mike will have to pay. These are just maximums for these different categories of cost. So next we'll transition to direct costs. What are direct costs? Well, direct costs are the costs specific to each student based off of their individual accounts. Direct costs differ in that they are not based on averages, but rather only include charges assessed by the institution. And so direct costs generally include different categories depending upon what it is that you're incurring. So tuition and fees will be based on your actual number of hours taken, not necessarily your enrollment status. Your housing, if you're staying on campus, will be a direct cost. If you're not staying on campus, you're not charged housing by the university, so therefore your net direct cost for housing is zero. Meals, if you're using a campus meal plan, that is a direct cost. If you're not using a meal plan, you have no direct cost for meals. And then a parking pass, if you have a parking pass and will be commuting to campus, then that is considered a direct cost as well. So we'll go back to Mike the Tiger here, and we'll look at his example. So Mike the Tiger is taking 12 hours of coursework at LSU, and then Mike will be living in a dorm on campus and will be utilizing a meal plan. So Mike's direct cost is comprised of tuition and fees totaling $11,906, housing, which is $7,860, which is his average housing cost. And I use an average here just to give you an idea of what a realistic housing cost would be. That's about your 50th percentile right there. Meal plan, Mike's meal plan cost him exactly $43.14. So his total direct cost is $24,080 per year. So that is the amount that Mike owes effectively to the institution for his expenses, for his tuition and fees, for his housing, and his meal plan. Certain things you will notice that are not included here are books and supplies, which if students can get those cheaper elsewhere, we want them to get them cheaper. So you're not obligated to pay the institution a specific amount for books and supplies. Same thing with transportation. Some students don't travel back home during their period of enrollment, so they don't have any transportation costs. They may live on the bus route, so the transportation cost may be less. Those are not considered assessed by the institution. And then so on and so forth. Personal miscellaneous, those can vary from student to student, and those are not incurred or charged by the institution. So next we'll transition to talking about the FAFSA application. And so the FAFSA application stands for the Free Application for Federal Student Aid. And this can be completed at FAFSA.gov. Now, one thing to note on this screen that you can see is it says free application, so never pay to complete. And the reason we put this out there is because there are a number of websites out there that will charge you upwards of $300 to complete a free application. And again, it's kind of like that commercial on TV for an insurance company. Don't pay $300 to complete a free application. Go to FAFSA.gov and complete the free application for federal student aid. In Louisiana, the FAFSA application is a high school graduation requirement. So if you haven't done your FAFSA application yet, that's probably concerning, and you should probably go ahead and get on that. To start a new FAFSA application, again, go to FAFSA.gov. You will do a new FAFSA application each year throughout your period of enrollment to ensure that you're checking for eligibility for any and all different programs that you might qualify for from the U.S. Department of Education. You start a new FAFSA and be sure to select the correct year. So it is very, very important to understand how the aid years work at the institution to know which FAFSA you need to complete and when. So for the upcoming school year, the 2021 to 2022 FAFSA application covers July 1st, 2021 to June 30th, 2022. Summer, however, is treated differently at the school level, meaning that summer can either be the header of the fiscal year, such as the case at LSU, or summer can be the tail end of the fiscal year or the trailer. At LSU, summer is used as our very first semester of the fiscal year. So when you did the 2021 to 2022 FAFSA application, that is to apply for financial aid for summer 2021, fall 2021, and spring 2022. If you're not coming for summer semester, no worries. Your aid will be packaged for just the fall and spring semesters. So high school seniors, you can now complete your 21-22 FAFSA application. If you complete the FAFSA application early, it can lead to better aid packages. So that is very, very important to understand that by completing the FAFSA application and doing all of the necessary paperwork early, you're giving yourself the best shot possible at different types of student aid. And what I mean by that is there's a lot of sources of funding out there that are limitedly funded. That means that there's only so much money that could be awarded to students, and then once that money runs out, the money's gone. This includes programs like the SCIG grant or work study, which we'll talk about here in a bit. And so making sure that you do things early gives yourself the best opportunity for these different sources of funding, because all of this is awarded on a first come, first served basis. But we get a lot of questions about the fiscal year that is used for the FAFSA application, or the tax year. And the Department of Education classifies this as something known as prior year. And for prior year, you're effectively using 2019 income on your current FAFSA application instead of 2020. And this limits situations where tax information is not available. This is the entire intent of it. And to give you context, previous to the prior year being implemented in the mid-2010s, there were students who were completing their FAFSA application and providing tax information that had not been filed with the IRS yet. And with the U.S. Department of Education, they are very, very much concerned with accuracy. And so by utilizing a previous year's tax return instead of the most recent year, this ensures that by the time the FAFSA application becomes available, everyone should have had their 2000 and, in this case, 19 tax return filled out for nearly 6 months and submitted. So the IRS will have that information on file and can provide that information to the Department of Education going forward. And we'll talk about that in a bit. A couple of important things to pay attention on your FAFSA application too. One, use the name that is listed on the Social Security card when you complete your FAFSA application. Don't ever use nicknames or given names or middle names. Make sure that you use a name that is officially listed on your Social Security card, because the FAFSA application cross-references your identity with a number of federal agencies, including the Social Security Administration, the Selective Service Organization, and a whole host of other organizations. So make sure that everything matches exactly. And then the last thing, it's fairly obvious, but we always want to point it out. Make sure that you proof your Social Security number, your date of birth, and your names before submitting the FAFSA application. Because like I said, it cross-references those with these different federal agencies. And if there is any kind of data conflict, it throws your entire FAFSA application into error, which causes a lot of stress in terms of getting documentation in to try and correct that. So again, with everything, proofread before you hit submit. Moving on, I want to talk about FAFSA Verification, which is a kind of confusing concept for a lot of students, but I want to make sure to clarify that for you as much as possible now. The federal government, as part of the FAFSA application, randomly selects 30% of all applicants for an audit. And this audit effectively is to ensure accuracy. We just talked about that. So if the FAFSA application is selected for verification, the institution, in this case LSU, will be requesting additional information and documentation from you to confirm the accuracy of the data that was submitted on your FAFSA application. So you may see requests for items such as a tax return transcript, but that's only needed if you did not use the data retrieval tool, a non-filer statement or a letter of non-filing from the IRS, a household statement. You may also see requests for certain documents like marriage licenses and W-2s and tax schedules and a whole host of other documents that come along with this entire process. And again, the entire intent of this process is to ensure accuracy. The Department of Education is and always will be concerned with accuracy when it comes to the FAFSA application. So make sure that you are paying attention to what you enter in on the FAFSA. And then if you are selected verification, you can go to your MyLSU account to view those verification documents that are requested, as well as going to our website under lsu.edu/verification, and you can submit the documents to us online, which will get it to us in the most prompt fashion possible. But one important thing to note: sensitive documents should not be emailed. as email is not a secure means of transmission. So a better way of thinking of it is that if you were to email us a copy of your Social Security card and somebody were to hack the email, they now have a copy of your Social Security card because you sent it to us as an email attachment, as a photo, or as a PDF. Instead, utilize that verification page and follow the instructions to securely submit the documents to our office to ensure that your information is not compromised at any point in the near future. So next we'll talk about the federal financial aid process. Once your financial aid has been received, and I'll kind of backtrack a little bit, once you've completed all your verification documents, then you're ready to be packaged, or you're ready to be awarded financial aid eligibility. And we anticipate awarding to occur at some point early March. So for the federal financial aid process, once you are awarded your initial financial aid offer, if you do want to utilize federal student loan funds, you have to actually accept or decline any of those loan funds, as opposed to the university doing it on your behalf. I can't obviously take out a loan in your name without your permission. So you'll have to actively confirm if you want to accept student loans, and you'll do so via your MyLSU account. In addition to that, all first-time student borrowers are required to complete an insurance counseling session, which teaches you about what student loans are, how interest works, how repayment will look like, and all of that, as well as a master promissory note, which is the legal document agreeing to repay this debt to the U.S. Department of Education. Both of which can be completed at studentaid.ed.gov, and you'll be utilizing your FAFSA application login to also complete these requirements. Furthermore, beginning this upcoming year, students will now also be required to complete an annual student loan acknowledgement session each year. And this is the Department of Education's way of confirming every year how much student loan debt you have borrowed, and then what your repayment will look like once you graduate from college or otherwise leave school. So if you take out student loans each year, you must complete this requirement to ensure that you have confirmed to the Department of Education how much money you have borrowed and to help keep you on track. And the idea behind this is just to ensure that students are not over borrowing if they don't need to. So next we'll talk about different types of federal student aid, and how the government determines who gets what types of aid. So the government awards student aid based off of a formula called financial need. And this financial need is very, very basic in terms of the computation of it. They look at that cost of attendance metric that we talked about earlier, and they subtract out the expected family contribution, or EFC, from that cost of attendance. And that EFC figure, I hate that acronym because it doesn't necessarily indicate what that number is. The expected family contribution, or EFC, is simply a computed number that is the end result of the FAFSA application and is a representative of your family's financial strength for the purpose of this need-based calculation only. And what I mean by that is that if your EFC, or your expected family contribution, is $10,000, you are not expected to contribute $10,000 towards your education. That $10,000 EFC figure is used in this context to determine if you have quote-unquote financial need. And what financial need applies to is whether or not students qualify for need-based aid. And this is generally better types of financial aid for you than you would otherwise get if you did not have financial need. This includes programs like federal work study or subsidized student loans or even grant aid, depending upon that EFC. For non-need-based aid, this is for students who don't have eligibility for need-based aid funding or who have maximized all of their need-based aid funding. This is not aid that is not based on the financial need calculation, and it includes programs like unsubsidized student loans and Parent Plus loans, which we'll talk about here in just a few minutes. So in terms of federal grant aid, we'll start off by talking about the two main programs. And I say start off, these are the two main programs with the U.S. Department of Education. One thing that you'll notice is that the Pell Grant eligibility does range from a small amount to a large amount. And again, that is all based off of that EFC figure, that expected family contribution figure that comes from your FAFSA application. And so for students who qualify, federal Pell Grants can be received anywhere between $672 a year all the way up to $6,495 a year. So almost $6,500 annually. And this does not scale up or down based off of whether you're in-state or out-of-state. That is a fixed dollar amount, max for the entire United States. The EFC range for federal Pell Grants ranges from $0, which is the most financial need, which means that you qualify for the most grant aid, all the way up to $5,846, which would qualify you for the least amount of grant aid. In addition to the federal Pell Grant, you have the Supplemental Educational Opportunity Grant, or SEOG. And it's exactly what it sounds like. It's a supplement to the federal Pell Grant program. You have to be eligible for the federal Pell Grant in order to receive this grant. This grant, however, is limitedly funded. So this grant is only awarded to students all the way until the funding allocation is exhausted. It's a maximum of $1,000 per year split between 2 semesters, so fall and spring, $500 apiece. And in order to be eligible, your EFC must be at least $0. So it's not a range there as much as it is a fixed dollar amount in terms of the EFC. You have to qualify for the maximum federal Pell Grant, and then the Supplemental Education Opportunity Grant comes in on top of that if you are eligible and if funding is still available. Next, we'll talk about federal work-study. So the Federal Work-Study Program provides federally funded on and off-campus jobs to students. And this also includes some community service program opportunities as well, depending upon what's available. The award is based on that financial need calculation we just got done talking about. It is, however, another limitedly funded program. So we do run out of funding for this program as well each year. There is a wait list available if you are not awarded the program initially, but we want to make sure that we can award as many students as possible. So again, make sure that verification is done. In that way we can qualify you for the initial round of awarding. It is self-help aid, and what this means is that there's no repayment, but you do have to work for the funding. You have to work a fixed number of hours per week, and that will depend upon the department's needs. And then you will earn a bi-weekly paycheck. And the average award value at LSU is about $2,000 per year. That can range a little bit, but on average it's about $2,000 per year. So next we'll talk about federal student loans, and I want to kind of provide a little bit of context as it relates to federal student loans. So there are 2 primary programs that are associated with federal student loans. You have the subsidized student loans or Stafford loans, and then you have unsubsidized. And for all intents and purposes, these 2 programs are identical except for how interest is treated during your period of enrollment or while you're in school. The interest rate on both of these loans is the exact same interest rate, and it's fixed, which means that it will always be that interest rate. Now, one of the key differences is that the subsidized Stafford loans will not accrue any kind of interest while you're going through school and on at least a half-time basis. So if you take out $1,000 and the interest rate is what it currently is, which is the 2.75%, then that interest will not start building on that loan until 6 months after you graduate or at the end of what's called your grace period. The unsubsidized loan, however, will start accruing interest from the day that loan is paid out until the day the loan is paid off. So you can see, obviously, the subsidized Stafford loans are going to be more prioritized or more beneficial to students, but that's also subject to that financial need calculation we just got done talking about. The interest rate on federal student loans does change from a year-to-year basis and is based off of a treasury note that is determined usually in May of each year. So for the previous year, the interest rate on federal student loans was right at about 2.75%, but we won't know what next year's interest rate will be until sometime around May 2021. In addition to that, each student loan has what's called an origination fee or a loan fee that is assessed on each disbursement of the loan. And this is a percentage that the government keeps as a processing fee for each loan disbursement. The average origination fee is about 1.058%. To give you some context, on a $1,000 loan, this equates to about $10. So you may accept a student loan on your MyLSU account for $1,000, but you'll receive, in reality, about $990 because the Department of Education keeps that origination fee. that origination fee does change every October 1st if your loan is not paid out by October 1st. So where the current where the current origination fee may be 1.058%, if the loan does not pay out to your account, meaning that you don't take the necessary steps in order to receive the funds by October 1st, then that fee will then be required to be changed. So it may go up, it may go down, depending upon the sequestration legislation that was passed by Congress. So it's very, very important to pay attention to those things, but ultimately they're not overly detrimental to students at this point in time. A 2.75% interest rate on a federal student loan is relatively minimal. And if it's one of those situations where it's a blend of subsidized Stafford loans and unsubsidized Stafford loans, then you're only going to be accruing interest at 2.75% on the loan that builds it now as opposed to later, which is the unsubsidized Stafford loan. The last thing I want to note about unsubsidized Stafford loans and subsidized Stafford loans is that both of these student loans come with what's called a grace period. And this is a 6-month window from a time you cease to be enrolled before your loans become due. So that means if you cease to be enrolled at least half time by sitting out a major semester, then at the end of those 6 months, your loans will be due and you will have to start paying on those loans. However, if you continue enrolling in school each major semester and graduate, then your grace period will not start until 6 months after graduation. But in either case, the Department of Education is going to give you 6 months after you cease to be enrolled in school before they're going to expect you to start paying those loans back. One of the downsides of federal student loans is that they do have limits. There are not an unlimited amount of federal student loans that the Department of Education will let you borrow. That is a common misconception. Instead, the Department of Education mandates that for most students, as freshmen, you will be limited to $5,500 per year in federal student loan eligibility, with no more than $3,500 of that $5,500 being of that subsidized variety or that interest-free variety. And then it scales up based on the number of hours you earn on a yearly basis as defined by the institution. So once you've hit 30 credit hours all the way to 59 credit hours, you then qualify for sophomore level loans. And then once you hit 60 credit hours and up, you qualify for junior and senior level loans. And so as you can see on the screen, there's a little bit of an increase there, but it's not a dramatic amount of increase. It's actually only about $1,000 per year more that you can borrow in federal student loan eligibility. So it's important to understand and pay attention to these loan limits. There is a lifetime cap of $31,000 for most undergraduate students, but we rarely see students ever actually hit that cap. Lastly, in terms of loans, I will touch on the Parent Plus loans. And the reason we do this is because there are a lot of parents out there who maybe would need to utilize this source of funding as in effect, a last-in sort of funding. Meaning that you have all these other funding sources in place, and now you're seeking to get that last little bit to cover your fee bill or to cover any expenses that you might need. And so a Parent Plus loan is for parents of dependent students. The Parent Plus loans are actually not based on financial need. The Parent Plus loans are based on credit history instead. And so what the Department of Education looks for is something called adverse credit. And this is not anything related to credit scores or debt to income ratios. Is simply looking for adverse credit or delinquent credit history, if you will. There's a very specific definition. If you'd like to research it, we can provide that link to you. But what happens is that if a parent wants to apply for a Parent Plus loan, it will run their credit with the Department of Education. The Department of Education will send back either a thumbs up or a thumbs down. They'll send a thumbs up if they found no adverse credit within a certain time frame, and that parent is then approved for the Parent Plus loan. And with the Parent Plus loan, the annual limit is equal to that cost of attendance we talked about earlier, minus everything else received in terms of student aid. So if you have a cost of attendance like Mike the Tiger did of $35,000, and your subsidized loans and TOPS and everything total about $10,000, then your parent could apply for the Parent Plus loan and receive a $25,000 Parent Plus loan to fill that remaining cost of attendance if they need. We always talk about only borrow what it is that you need, But in some instances, parents do need to cover a lot more expenses than just the direct cost. So they do have this option available to them. Just like these subsidized and unsubsidized loans, it comes with a fixed interest rate, which will be determined in May of this year, in May of each year, rather. And it also comes with its own origination fee on each disbursement, which is a little over 4%. So it's a fairly high origination fee on the Parent Plus loans as well. But one of the great features of the Parent Plus loan is that the U.S. Department of Education understands that not all students will be able to get this type of funding. Not all parents are going to be able to get approved through the credit check process. And so in the event that a parent is denied the Parent Plus loan because of their credit history, then the student potentially could become eligible for some additional unsubsidized loan funding, typically totaling about $4,000 extra per year. If that won't necessarily cover what it is that you need it to cover, you can look into other options like a cosigner on the Parent Plus loan or doing a credit appeal. But just know that by applying for the Parent Plus loan, one way or the other, you're going to receive some additional federal funding, whether it's the parent taking out the Parent Plus loan because their credit was approved, or the student getting an additional unsubsidized loan eligibility awarded to them because the parent was not able to get approved. So next, I want to talk briefly about what if the prior year income that we talked about earlier is not reflective of my current financial situation. And given the environment that we have seen in the past 12 months with the pandemic, this has been more relevant than ever. You have some families that have had a decrease in wages. You've had some families that have actually lost employment. You've had death of family members, immediate family members, mind you, divorce of parents, or recent marriages or remarriages. All of these situations change the financial situation on the FAFSA application. So in the past 12 months, if a parent has lost their employment, then their 2019 taxes might not necessarily be reflective of their actual income situation within their house. And so if this is something that maybe has occurred to you in the last 12 months or at any point since the 2019 tax year, reach out to our office, contact our financial aid and scholarships office, and request what's called a special consideration or a professional judgment. The Department of Education gives the institutions the authority to update the FAFSA application, those data elements, to try and account for a more accurate financial situation within the student's home. The end result of this entire process is to lower that expected family contribution, or that EFC, in an attempt to try and qualify for some additional funding. So keep in mind that if any of these events occur going forward as well, you still can do this. You can still contact our office and say, hey, my parent just now lost their job. What do I do? How do I get that accounted for? And you'll be given some information, but that will help you decide how we can proceed going forward. The special circumstance or the special consideration or the professional judgment is not guaranteed to necessarily give you additional funding. And even then, what we're trying to qualify you for is some additional federal Pell Grants. But we will at least make the attempt to try and see if we can qualify you for some additional funding. Once we lower that EFC, or if we're able to lower that EFC and it results in new funding for you, then we'll be excited to award that to you. So now I want to talk about the fee bill. So the fee bill is another name for the bill for each semester. So when you have selected your housing, and when you have been awarded your financial aid, and when you have scheduled your classes, come July, you will receive a fee bill for the fall semester. This is your official charge summary, and there's an image of it on the right to kind of show you what it looks like. So you'll log into the MyLSU account, you'll select the appropriate semester and year, and you'll click View Fee Bill. And it will display available options depending upon what your individual financial aid situation is as it relates to your total charges. So if you look on the middle of that image, it says transaction details. It shows you your tuition, your fees, operational, all of these different fees that the university assesses. And then you have a subtotal at the bottom. But if you look at the top, you do have other things that are applied against those charges. So you have the anticipated TOPS value of $3731.49 applying against the current semester total. And then you have your stipend. So this is the performance student who is receiving that extra $200 per semester. And then you have additional financial aid credits totaling $3931.49. Oh, excuse me, anticipated financial aid credits totaling $3931.49. So this drops the fee bill balance down pretty significantly. But one of the things you'll notice on this screen is a deferment. And we'll talk about that here in just a second. But a deferment effectively is a payment plan. But if you don't want to go the deferment route, what you can do is select the credit card option or the bank draft option. If you want to go ahead and make that payment to pay off any residual balance due, you can select one of those two options. We do like to point out, however, that the credit card process will assess a 2.5% processing fee on each charge. So if you have a large amount that you're paying, then the credit card company is going to charge you an additional 2.5% fee on top of the balance you owe. Whereas if you pay by bank draft, there is no processing fee. You only pay what it is that you owe. So going back to those deferred payment plans, the university does allow students to break whatever their remaining balance due is into monthly installments across each major semester. So these installment plans effectively are allowing you to make the hit a little bit more digestible. If you don't have any funding necessarily that you're waiting on, you can, instead of paying this amount up front, it breaks it up and makes it a little bit easier to handle. So to be eligible for a deferred payment plan, all students are eligible initially. And this means that your very first deferred payment plan, it's automatically granted by utilizing it through your MyLSU account in setting it up through that process. But subsequent payment plans are instead based on the individual's credit history with the university. And the reason we put this bullet point on here is for the third bullet point. Failure to pay deferred payment balances will negatively impact eligibility for future deferments. So what can happen is you will have a student or a parent or a family that will utilize deferred payment and say, hey, I want to take this last $1,000 that I owe for the fall semester and I want to split it into 3 monthly installments across the fall semester. And I will pay these monthly installments. But then something happens and you're not able to pay that $1,000. Well, each payment that you miss is assessed a 5% late fee. And then on top of that, when you get to the spring semester, the bursar's office reserves the right to deny approving any more deferred payment plans because you did not make your payments on your first deferred payment plan. So it's very, very important to make sure that you stay on top of those payments if you do utilize deferred payment, at least until you otherwise are able to resolve any remaining balances due at the university. One last important note is that in order to sign up for the deferred payment plan, there is a $40 non-refundable enrollment fee. And this is simply a fee for the university to maintain the collection of those accounts. So that does have to be resolved on the front end. So for the deferment plan options, the deferred payment plan rather, there are 3 different options you can select. One is where you put 50% of the remaining balance due down, and then the remaining 50% is divided into 3 equal installments across the semester. The second option is where you only put 25% of the total remaining amount due down, and the other 75% is split into 3 equal installments across the semester. And then the last one is 10% of the charges down on the front end, and the remaining 90% is divided into 3 equal installments. And so if you look on the screen here on the bottom left corner, you'll see what those installments typically look like in terms of the due dates. So if you do deferred payment for the fall semester, the down payment is due by the fee bill due date. The first payment for your deferred payment is due October 1st, second payment is due November 1st, and the final payment is due on December 1st. And so that will get you resolved for any balances that you owe for the fall semester by the end of the fall semester. And then if you utilize deferred payment in the spring semester, that goes from March 1st, April 1st, and May 1st as well. And then for the summer, since summer's a shortened semester, there's only 2 dates, July 1st and August 1st. So deferred payment is a great option for families, but it's important to make sure that you stay on top of those payments. And if you run into any issues making those payments, to reach out to either the bursar's office or the financial aid office, so that way we can help you. So to sign up for deferred payment, there's several steps that you have to follow, and the image on the right kind of shows you what it looks like to select one of those different options, the 90% deferred, 75%, and 50%. So you'll log on to your MyLSU account and select registration services. Then you will click deferred payment / payroll deduction and select the correct semester. So for you, this would be the fall 2021 semester. 3, you would click View Options and then click Request Deferred Payment. And then you will come to the screen that you see on the right where you'll select the plan that you want to use and click Add Plan. And then when you go back to your fee bill and look at your fee bill, you will see if the deferred payment has been applied. And if it has, you will see that $40 deferred payment service fee that is due to complete registration. So even if you owe $2,000, if you defer that $2,000, depending upon what your other aid resources show up, then you may only have to pay that $40 deferred payment fee. One important to note is that classes added after registration is complete, meaning after you've paid that fee bill, do not automatically roll into a deferred payment plan. So if you only register 9 hours and you pay the fee bill based on 9 hours of tuition and fees, and then you add another 3-hour class to put you at 12 hours of tuition and fees, the difference is not going to be added into your deferred payment plan and instead is going to be due effectively immediately. So you will need to contact the bursar's office to resolve that balance or to work with them on it. One important screen that I do want to point out is the direct deposit of refunds. And the reason I want to point this out is because students who are eligible for a refund, and this means that funding that is exceeding your charges for any given semester is required to be issued back to the student. And then you can use that funding for any number of educationally related expenses such as books and supplies, or housing, or meals, or transportation, laptop computers, you name it. But one of the things that we want to make sure is that we can get you that funding as soon as possible. So first bullet point, you'll notice it's quicker and more secure than physical checks. If you do not utilize direct deposit, the university instead must mail you a physical check to the address on file with the university through a third-party vendor, which can then delay the receipt of those funds, which you may need to cover rent or books or so on and so forth. Secondly, funds are remitted to the bank the next business day if you use direct deposit and are available within 2 to 3 business days as opposed to waiting for that check to come in the mail. And the last bullet point again emphasizes that the checks must be printed and mailed. So if you want to set up direct deposit, all you have to do is log onto your MyLSU account and click Financial Services, then select Direct Deposit of Refunds, and then enter in your bank account's routing number and account type, and then hit Submit. And that's it. You're good to go. It is automatically in place. So on the slide, I do want to note a couple of things. This is the contact information for the bursar's office. They can be reached at bursar@lsu.edu or by phone at 225-578-3357, or you can schedule an appointment with them virtually through the Navigate app. And this can actually have you schedule an appointment individually with someone in the bursar's office to help you with your billing account. And then as you see at the bottom, you can visit their website for more information regarding any number of these programs. The last slide I want to take time to mention is our undergraduate counseling team. And these are our undergraduate financial aid counselors who are just an absolutely incredible staff that really have put in a lot of time and dedication to understanding student issues, understanding the mechanisms and eligibility criteria for all of these different federal student aid programs. It can help you navigate this often complex and tedious process. And so pictured up top, left to right, you have Ms. Morgan Trappin, Ms. Madison Hayden, Ms. Kristen Brandon, Mr. Tyler DeFrancis. On the bottom left, you have Ms. Lacey Thibodeau, Mr. Craig Montgomery, Ms. Gracie Rees, and then Mr. Nathan Bromley. And so at any point in time, you can schedule a meeting with our financial aid team through the Navigate app or through the Slate portal or by coming to Pleasant Hall. One way or another, we are here to serve you in every single capacity that we can. And so please make sure that you are utilizing this as much as possible. If you go to our website, which is just lsu.edu/financial aid, you'll find all of their contact information and scheduling links on that website. And with that, I would like to say thank you for your time today. I appreciate you taking the time to go through this information with me. If you have any additional questions, please do not hesitate to reach out to our office or visit our website, lsu.edu/financial aid, or you can call us at 578-3103 or email us at financialaid@lsu.edu. And with that being said, as always, go Tigers.